Hi guys, this is Ankush here and I welcome you to the fifth episode of Trading with Candlesticks. Now before we begin the video for today, let's look at what we have covered so far. We started with support and resistance. We saw that support is the zone where the buyers start coming into the market, they push the share prices up, and resistance is a zone where the share price tends to go down because the bears or the sellers start coming into the market. We also saw that these are not permanent, which means at some point in time, the price will break the resistance if it's bullish. And once it breaks the resistance, the same resistance zone will start acting as the support zone. Based on this, we derived a simple concept called breakout and pullback strategy. We also saw that the 200-day exponential moving average can act as a very strong support or resistance given the COVID situation, because most of the shares or 95% of the shares are actually trading below the 200 exponential average. Well, all this is fine, but please remember that all this has to be used with the candlestick patterns. So if you have not seen any of my videos before, or if you are getting confused about what I'm saying, please go and check out my episode 1 to 4 where all this is explained in detail. Now, the question for today. What do we do with the share price which is not near the 200-day exponential moving average? Don't we trade in them? Yes, we do. And the answer is simple. We draw our own support and resistances. And that's the session for today. Let's check out how can we draw our own support and resistances. So in today's session, we will first look at the different trends that a stock follows. We will draw a support and resistance in one of the candlestick charts for one stock, and we will look at one trade which I practically took purely based on support and resistance and candlestick patterns. So let's begin by talking about the market trends. Now, any stock moves either in an uptrend, in a downtrend, or in a sideways trend. Now, even if it's a very bullish market, no stock will move vertically upwards towards its all-time high, and even if it is an extremely bearish market, no stock will move vertically downwards towards zero. It will always move in a trend which is either an uptrend and in a zigzag manner. Now, what is a zigzag manner? Let's look at it. Let's start with the uptrend. What happens typically in an uptrend is a stock price from a low creates a new high, it moves back or does a pullback, it creates a low which is higher than the previous low, again moves in the direction of the trend, creates a new high which is higher than the previous high, another pullback, creates a low which is higher than the previous low, and so on and so forth. So what we are interested in is to look at multiple points of lows and multiple points of highs. So you have a low, a higher low, another higher low, and so on and so forth. And on the other side, you have a high, a higher high, a higher high, and so on and so forth. So whenever a stock follows this pattern, we say the stock is in an uptrend. And in an uptrend, we always look to buy the stock. Where do we want to buy the stock? At these low points, because when we connect these multiple low points, they basically form my support zone. And when I have a candlestick pattern, a bullish candlestick pattern at this support zone, that's when I will look for an entry. Let's look at a candlestick pattern or a candlestick chart from a stock which was in uptrend. So here, if you see, it has made a new low which is higher than the previous low. Here, another new low, another higher low, and so on and so forth. So in all these low points, I would look to invest, or I would like to buy this stock, because I always want to invest in the direction of the trend which is upwards. Let's look at a downtrend now. Now, a downtrend is exactly opposite to that of a uptrend. In downtrend, what happens? A stock from a previous high point creates a new low, does a pullback, which is this time it moves upwards, creates a new high which is lower than the previous high, again moves in the direction of the trend, creates a lower low, pullback, a lower high, in the direction of the trend, lower low, and so on and so forth. So again, what we are interested in is lower low, lower low, lower low, and on the other side you have a lower high, and a lower high. Now whenever a stock moves in this direction, we typically say it's in a downtrend or in the grip of the bears. So what we do when a stock is in a downtrend, we would like to sell or find opportunities to short or to sell at these high points. And when we connect these multiple lower highs, we form a resistance zone. How does it look like on a real chart? It's something like this. So if you see, this is a real candlestick chart. It has created one high, another high which is lower than the previous high, again a lower high, and so on and so forth. And all these low points will typically have a candlestick chart or candlestick pattern which will tend to tell you that it is in a downtrend or it is about to go down. Fine. Now let's look at the sideways trend. In sideways trend, what happens? In sideways trend, even though multiple highs and multiple lows are created, these highs and these lows typically end up being at the same level or a similar price level. So here what we have to do is we look at opportunities to buy at the bottom. Of course, you need to have a candlestick pattern over here which indicates a bullish movement, and we tend to sell at this point again based on a candlestick pattern which is formed at this point indicating a bearish movement. Now one thing which you just have to be very careful in a sideways market is that the moment a sideways market is broken, it is a very powerful breakout and the stock price typically moves very rapidly in that direction. For example, let's say if a stock price after this bottom low moves downwards, it does a breakout. This breakout is typically very, very powerful. And if it breaks out, we will not have a bullish candlestick pattern over here. Now, why this is formed is, I think people who really know technical analysis will understand the concept of double bottom and double top, or triple bottom and triple top. These are very powerful combinations. Typically, they signal a trend reversal in a particular stock. And when the trend reversal happens, it means that either I am at the extreme top or I am at the extreme bottom. Now, let's say if stock has had a really good bullish run and then it has moved in a sideways market, and then if it breaks down over here, it breaks the support and moves downwards, and if we are in a buy position, we can very, very rapidly make losses. So be very careful when you are trading in a sideways market. Now again, this is just an example to show you how it looks like on a real candlestick chart. So before we start drawing our practical, take a practical example and start drawing our support and resistances, let's briefly revise the rules once more. Simple rules. Number one, connect multiple swing highs and multiple swing lows to make a support or resistance. Second thing is, a support or a resistance typically does not cut the body of the candle. If it cuts the body of the candle, it means that is a breakout. Yeah, that's not really a support zone. It may be a support zone, but a breakout has happened. So when we are drawing it, we would avoid cutting through the body, but cutting through the wick is fine. And the last and the most important rule is that a particular support or resistance zone should be tested minimum 3 times to make sure that it's a reliable support or a reliable resistance zone. Else we cannot, I mean, people do buy, but it's not very reliable. So it's always better to buy or sell or place your bets based on a reliable zone, because it's ultimately our hard-earned money. Now let's look at the rules for investing. The rules for investing is simple. Invest in the direction of the trend and always combine support and resistance with candlestick pattern. If the pattern is not there, the probability is very, very high that it might end up making a breakout in either direction. Now let's take a practical example and try to draw our own support and resistances. Yeah. Here I have taken an example of Ultratech Cement, which is an Aditya Birla Group, and it is the biggest cement manufacturing company for India. So now what do we have to do if we want to draw our own support and resistances? Just go to the TradingView website, open a candlestick chart and zoom out a bit. So here, for example, if you see, I have taken a time frame of approximately 1 year, And the reason for zooming out is that we get, as we say, a bigger picture, and we are not so distracted by too much of noise by everyday candlestick patterns. Yeah. So once you have zoomed out, just select this trend line as the tool, as an option, and start connecting multiple lows and multiple highs. So as a beginner, what we can do is we can look at the extreme lows and the extreme highs of any given chart. So let's say I draw something like this. If you see, it connects multiple lows, has been tested 3 times, and this for me can act as a reliable support zone in future. Yeah. Now, if I come more towards the recent past, again, let's try to draw another support zone. If you see here, we can see multiple lows. Let's try and connect this. Yeah. And if you see here, we end up making, or we have tested this particular support zone, in fact, more than 3 times. It's 1, 2, 3, 4, 5, and 6 times before it made a bullish move. Again, note, we are okay to cut through the wick, but we should not be cutting through the body of the candle. Yeah. Let's try to draw some resistances. Let's start with a horizontal resistance, because a horizontal resistance or support is typically very strong. And if I see approximately at this level, I can see more than 3 tests which have happened. 1, 2, 3, and 4. And again, we are cutting through the wick, but we do not cut through the body of the candle. Yeah. Let's see if we can draw a slant one. This is the all-time high for Ultratech Cements. So let's see if we can connect multiple highs and create a resistance. Yeah. Again, if we see, this gives me another resistance. It has been tested 1, 2, 3, 4, and 5, which means this was in a downtrend, and then it made a breakout and started moving up. Now, very interestingly, if I have to trade, let's say now if I have to trade on this stock, yeah, I have taken a candlestick chart only up to 27th of Jan. And if you see, the candlestick or the latest price of Ultratech is very, very close to its strong resistance, which is a horizontal resistance. And if you remember from my previous videos, I have always mentioned that a horizontal support or a horizontal resistance is always very powerful. Let's see what happened 1 day later. If you see 1 day later, it is at the resistance. You have a bearish engulfing. Now, what does this indicate as per candlestick patterns? As per candlestick pattern, there is a very high probability, especially in an engulfing pattern, there is a 80% probability that this is going to go down. Now, I was holding this stock, and what I did was, after seeing this bearish engulfing on 29th of Jan, I took a decision to sell it. Let me show you the contract note for that. It's on 29th of Jan at 9:21 a.m., which means as soon as the markets open, within 5 minutes I took the trade. It was a sell order because on 28th Jan I saw a bearish engulfing, and it was a price of 4625. Yeah. Let's see what actually happened to the stock after I took this trade. Now, post March, I would say this was pretty much a COVID meltdown. But even before March, if we see that actually on 29th of Jan, the budget was not announced. There was not a single case of COVID in India. But nonetheless, the stock price of Ultratech Cements had already started coming down. And this is exactly what I mean when I had told in my first video that a price of a stock is emotions plus fundamentals. And When we combine these two, it gives you a very, very powerful tool to trade. So this was an example where I took a trade purely based on support and resistance, and I combined candlestick pattern along with the support and resistance. So that's it from my side for today. I hope you learned something and enjoyed the session. And if you did, I would request you to please subscribe for my channel and do not forget to click the bell icon. Until next time, stay safe, stay healthy, and enjoy your trading. Thank you.